Hello and welcome back guys to the channel, and on today's video guys I'm basically going to be teaching you guys a little currency correlation trick that could actually help you realize and understand most moves of the market in a lot of different pairs. Now before I get into it, so make sure you of course subscribe if you haven't, turn that bell button on for notifications, and let's get into it. Right, so what I'm about to teach you today is basically based on the USD part, right? So I'm gonna be teaching you guys on how to correlate the DXY, which is the dollar currency index, in relation to other pairs, right? USD pairs to be specific, on how to use the DXY to determine the direction of basically all the USD pairs. Now, what we're gonna realize is one thing, right? So if the DXY is bullish, right? If the DXY is bullish, this means that what the dollar is strong, right? And if the dollar is strong, then we're gonna see a bullish trend, right? We're gonna see a bullish trend in what XXX in XXX USD pairs, right? USD pairs, right? They are gonna be no, sorry, I beg your pardon. We're gonna see a bullish trend in what in USD XXX pairs, right? Why? Because the dollar is strong, and for the opposite of that means that we are actually going to see a downtrend in what we're going to see a downtrend, right? In XXX USD pairs, right? USD, right? Sorry for the annotations, but I do hope they are very much understandable, right? So if the dollar is strong, right, the DXY in that case is bullish, right? It's breaking highs and highs and highs and highs, right? Then we're actually going to see a bullish trend in USD XXX pairs, right? For example, USD CAD, right? USD JPY, and etc. And for that case, we're actually going to see a downtrend in so-called XXX USD pairs, right? For example, Euro USD, the Pound USD, and etc. Why? Because like as we know it, when these currency pairs are put in sets of two, right? So there's like there's the first pair here and the second pair here, right? So if the first pair is strong, then that trend is going to be bullish, and if the second pair is strong, then that trend is going to be bearish. Same case. This is why in when the dollar is bullish, then the USD XXX pairs will be bullish, and the XXX USD pairs will be bearish. Why? Because USD in here is the second currency, which is the stronger one, hence the bearish trend. So with that being said, let's now go and do some technical analysis on the DXY and prove everything I have just said here. And just for the case as well, if the so this is in a bullish case, right? And vice versa is true, right? So if the DXY is pushing bearish, right, then we're actually going to see what, instead of a bullish trend in USD XX pairs, we're going to see a bearish trend. Why? Because the dollar is weak. And instead of a bearish trend in XXX USD pairs, we're actually going to see a bullish trend. Why? Because the dollar is weak, and the first currency here, whatever it is, will be stronger than the USD. So it's just a case of a vice versa, right? So now let's go to the actual charts and see what exactly I've been saying and how it's basically applied through technical analysis, of course. So let's clear these, and let's remove these so-called ads. So right now we are on the Euro USD pair, which is I'm in the 4 hour. So let's go like to the daily and see how it's been, right? So over the past months, I have said this a lot, and like it has paid off to you who have been listening, who have been active on the channel for quite a while. And if you haven't, then don't just jump to the current videos. Make sure you work your way up through the first videos, in a chronological order, so that you can understand everything as the MMC footprint strategy is taught. Now, over the last couple of months, we've been very bearish on the the Euro USD ever since this breaks here, right? And ever since this breaks here, where we have been, consistently breaking lows, creating lower highs and lower lows, right? We have been breaking all these lows, all these lows, all these lows. But yet until the most recently, when we have had this this break right here, right? So we have been very bearish on this. So as you can see, just by following intermediary or institutional, I mean, sorry, institutional overflow, right? We have had lows, highs, right? Lows, highs, lows, highs, lows, and now we have started now to put in new highs instead of new lows. This means what? So initially the market was breaking lows, right? Breaking lows and breaking lows, right? Yet until recently, when we have had this break of structure to the top side, indicating that what the market is now shifting from its prior bearish trend into a new bullish trend that's about to be put into place if this structural break right here is likely to hold. So in that case, this break right here. So I mean, let me just put in the trend line. This, this brush is a little shady. So we have had this break of structure to the top side. So let's put it like that. Boom. So with that break of structure has indicated that what? That the Euro USD, right? So this is like the daily chart, and we know that higher time frame structure is, like always likely to hold. So we have broken structure now to the top side instead of the downside, meaning that what? The market is now putting in a new structural move, which is the bullish one, instead of progressing with the prior bearish trend. So let's go to now to the DXY and see why did this happen, right? So let's go now to the DXY chart. So this is the DXY chart in the daily, right? So the dollar has been quite bullish, right? As you can see, oil price has been, consistently breaking highs and creating new highs. Yet until this point where it failed to create a new high, creating this so-called the so-called the short market structure, right here, right, this short market structure, when price has failed to break this high and create a new high, but instead it has gone lower and broken the low to create what a new low, right, which instead has made that pullback, giving us that beautiful little entry there, and then progressed or continued going bearish, right? So we now have the first break, a pullback, the second break, a pullback, and the third break, right? So this so this was like break one and break two, and according to the Dow theory of structure, the guy actually said that, if you're having a structural or a trend, right? If you're having a trend, right, that's gone bullish like that, and then you have had a break of that trend, right, with this first break, right? So according to the earlier wave theory, right, price is more likely to do this. Why? Because these are simple liquidations of price, right? Grabbing this liquidity and gaining more momentum to come to take out this high. But instead, what price did is that price came back, hit a supply in there, and then went bearish again. So causing what? A second break. So with break one and break two, right? So the guy said that if price breaks structure twice, that newly established trend is more likely than not to hold, right? And that's what we have, right? So this is just a proof of a new trend being put into place, right? And that's exactly what happened in here, right? So let me remove some of these drawings to keep my charts a little bit cleaner, right? So that's what we have had in here, right? When we've had this first break and the second break, meaning that what this newly bearish trend that's been put into place is more likely to hold. So what we are more likely to see in this trend is that we can see an upseas like this, coming towards this mitigation right here because of what a supply zone or an order block that's lying in there, and from here we can now confirm this to go even more bearish with it, with these lows as our next liquidity runs, right? If price wants to go that way, right? So with that being said, this is like the exact justification of what's been happening on the Euro USD. So as we saw that prior, the Euro USD was pushing what? Bearish, bearish, bearish. Why? Because the dollar was what? Strong, right? And as I say, if the dollar is strong, then we are likely to see a bearish trend on what? On the so-called XXX USD pairs, right? USD pairs, right? So this is what exactly has been happening over the last couple of months. Yet until recently, when we have broken a low, come back to retest, and then broken again, which is what? Which means that, okay, so the dollar has shifted from the bullish trend to a bearish trend. Okay, so with the shift of the dollar from the bullish trend to a bearish trend means what? The dollar is weak. And as I said, if the dollar is weak, it's just the case of the exact vice versa of this. So if the dollar is weak, that means whatever currency that's lying uh, ahead of here is going to be stronger than the USD. In that case, that's exactly why, right, the euro USD has now started to push bullish. Why? Because the dollar is strong. Hence, the what? The bullish trend that's currently being put into place. So that's just that's a way of how to analyze whatever pair you're trading with its original currency, right? So as you can see in my watch list, right? So this is just a simple trick that I'm gonna teach you guys. I hope it could put a lot of impact in your trading. Why? Because it's very hard for you to be on the wrong side of the market when you know what you're doing, right? Because if you analyze the DXY and find that, okay, so the DXY, according to the MMC footprint strategy technical analysis, is pushing bearish. Why? Because we have had multiple breaks of structure. That means, okay, so if the DXY is pushing bearish, then why the hell are you going to sell Euro USD, right? Because we know that, okay, the dollar is strong, the dollar is weak and the euro is strong. That pair is automatically gonna be pushing bullish, regardless of the fundamentals or any shit that's there, right? Technical analysis is the whole root of forex trading, right? Without technical analysis, you're pretty much gambling, right? That's all I can say. So this little trick will actually help you guys more often than not to be in the right side of the market whenever you are actually looking to trade that respective pair. So as you can see on my watch list, right? So this is the thing that I was just about to say. On my watch list, as you can see, I have the USD section that's filled with USD pairs that I do like to trade, right? Just because you have the DXY, you don't have to trade every USD pair. That's just gonna add confusion, right? You should have you know, your certain group of pairs that you're gonna stick with them and master them in the long period of time to actually ensure your longevity in understanding them, in big time, right? And also I have a section of the JPY pairs, right? The JPY pairs that I myself I like to trade. So as you can see, I have the Euro USD, the Pound USD, the gold, and the USD CAD. And on the JPY section, I have the Euro JPY, the Pound JPY, and the USD JPY. And on the part of indices, I don't trade them indices. No, what I do is just use the indices to actually correlate my technical analysis from one pair to another. So if I analyze the DXY and find that the DXY is bearish, and I go to the Euro USD, I do the same. And I go to the Euro USD and I do that same technical analysis and find that the Euro USD is pushing bullish. I automatically know that my technical analysis is 99% accurate. Why? Because everything lies, and everything just binds itself to one another. And with that being said, guys, so I don't wanna put this video to be very long. So for today, this actual knowledge is enough for an introductory video. And of course, I hope you enjoyed the video. And if you did, then make sure you like. Of course, subscribe if you haven't. Turn that bell button on for notifications, because we are gonna publish a lot more of episodes concerning this currency coloration trick. And of course, have a nice trading week. And as usual, peace out.